if you go with the, the previous discussion what we had, so major part of our discussion focus on the computation of so therefore question number 1 contains 50 marks, which 40 marks is given for the computation of the income tax liability of the resident company, right? So in that context, basically the financial statement, extract of the financial statement or the details of the financial statements are given. So net profit before tax, you have to use that one, and thereafter you have to adjust the relevant say expenses or the income as per the tax law. So therefore you should have that good understanding about the what shall be included in the income side, as well as what shall be allowable under the expenditure, and also the other source of income. In the financial statement, we are recording all income and expenditure. So, but for that could be the source of income, we need to work out separately accessible income from the respective sources, like say business, investment, and other source, because this is a company. So that need to be work out separately. Therefore, that guideline section 11 section in the 11 Act, giving the detailed explanation how to we do. Therefore, that knowledge is important, right? So the part 2 of the question number 1 is contain almost 10 marks, so which is some sort of advisory question, just like so the expansion, or they are going for the new investment, or they are having some sort of splitting of business, how that tax is come to play. Question number 2 entirely focused on the non-resident tax liability, computation of the non-resident person's tax liability. So in that context, basically that is also for non-resident corporate, and also they be non-resident individual, some how it's applicable. So in that question, basically I am expecting that how to determine the residential status, right? Second thing is whether that person is having a source in Sri Lanka in case of the non-resident person, because entirely the question is focused on the non-resident tax liability. Therefore, just have a understanding how we should recognize the non-resident person, especially say company which is incorporated outside Sri Lanka, and they are doing business in Sri Lanka, so that person should be recognized under the non-resident under the environment as non-resident person. Thereafter, whether there is a source in Sri Lanka, what they are doing, or what is the source in Sri Lanka, just like say business or whatever thing. So in case of the company which is doing business in Sri Lanka, means it's a business source of income is business. So there is a source in Sri Lanka. So then how we should work out the taxable income of a non-resident person. Remember, when we discuss in the tax computation, we didn't discuss whether it is relevant for the resident, non-resident, or whatever thing. So, but only thing is, in case of the non-resident person, if he having a source in Sri Lanka, then he is liable for Sri Lanka tax. So how to work out, that is very similar to the approach, is very similar to the computation of the tax liability of the resident person, right? So therefore that knowledge also again important when you work out that question. So basic, another part is remittance tax. Of course, say non-resident person, when they are taking money back to their country, or that profit, they are taking back that profit to their country, they have to pay tax at 14%. That is remittance tax. It is paid after profit after tax. That first thing, we need to work out the taxable income. From there, we work out the tax liability. After deducting that tax liability, the balance amount, if they are taking back from Sri Lanka, they have to pay again 14% tax. That is remittance tax. That part also I am testing in that question. Therefore, you should have some sort of understanding how to work out that remittance tax for the liability, determination of the liability. So special adjustment for the non-resident entity. So they are doing business in Sri Lanka. So allocation of head office expenditure and Article 7, application of the Article 7, that type of things you should know. I mean, basically, even though Indirect Act says some expenditure which is deductible, but under the article of the relevant double tax avoidance agreement, Article 7 says some sort of expenditure not deductible, just like say management fee paid to head office, unless banking business, interest payment to head office. Otherwise, if it's actual reimbursement of expenditure, that is disallowed, not deductible. So that type of special adjustment you should know. Another thing is, if the head office is allocating head office expenses incurred by the head office, allowable expenditure incurred by the head office for branch, especially in branch, under section 79 it says, so that can be deductible, but maximum limitation is 10% of the assessable income from business in Sri Lanka. So that type of adjustment you should know, right? So that is question 2. Question number 3, basically, there is also 10 marks question, which is relevant for elevated tax computation. So uh, under the elevated tax computation, there are basically two parts, that is input tax and output tax. Output tax is on our supply. So determination of the value of supply, that type of things are testing in that question, whether it is liable supply or exempt supply. And if in case of the liable supply, how to determine the value of the supply. Just like say, if there is a market value, we have to use the market value. In case of this, it is inclusive of the VAT. So how to work out the supply using the tax fraction, and exporters just like zero rate supply, that type of thing. That is coming under the output tax. Under the input tax has basically could be from importation of articles or local purchase of articles or services. From there, if there any disallowable input tax, we have to remove that disallowable input tax. You should know that what are the disallowable, the circumstances where any input tax that could be considered as disallowed. So just like say uh, not having proper tax invoice, or not with claiming within the period, especially uh, what is this improper tax invoice, or vehicle used for traveling purpose and expenditure that paid on such expenditure are disallowed. So these things please check, and thereafter once we remove the disallowable input tax, then it comes allowable input tax. So then thereafter allowable input tax, you have to set off against the output tax. There is a zero rate supply, an asset supply, of course, that I'm not in a view of that. It's not fair to test asset supply, because this is the last time we can check, because effective from today, asset is getting got abolished. Right. Therefore, I think that knowledge is not much important. Therefore, I don't have any intention of checking asset this time, right? So, and balance input tax. If there any broad thing we have to add to the balancing, which is attributed to the standard supply, is limited to 100% of the output tax of the standard supply. If there any balancing, we can carry forward. So after claiming all the input tax, there's additional of the payable for that particular period that need to be discharged by installment tax rate. That's the question number 3. So that basically part 1 is comprise these 3 areas. So computation of the corporate income tax of a resident company, non-resident tax liability. Third one is VAT. So the second part of the part 2 of the paper, uh, having again another 3 questions. Out of the 3 questions, you can answer 2 questions. So one question definitely from SSCL. Under the SSCL, you know that we recognize who are the person liable and what the turnover and the relevant turnover. So in case of that, say manufacturer, service provider, buying and selling. So manufacturers is liable turnover, on that 85% we have to consider, on that 2.5%. And service provider entire thing we have to consider, or the 100% of the liable turnover, on that 2.5%. So wholesale and retail category that has two parts: buying and selling, including import and local sales, and registered distributor. Right? In case of the import and local sales or local buying and selling. So on top, liable turnover, we are considering only 50%. On that, 2.5%. In case of the registered distributor, as a definition of the registered distributor means local manufacturer who appoint a person to distribute his goods at a given price, or the price decided by the manufacturer in the wholesale market. That is the person who is considered as distributor of SSCL. Right? So in case of the registered distributor, remember, it's local manufacturer, not the foreign manufacturer. That means import and local sales, say importer, the foreign supplier who is appointing local person as a distributor is not considered as a distributor for SSCL purpose. Remember that one, right? And in case of the registered distributor, that means local manufacturer who appoint a person to distribute his good or the manufacturer's good in the wholesale market at the price given by the manufacturer, we are considering a total turnover. On that liable turnover, we are considering 25% for SSCL, and that 2.5%. So there is no option to claim input tax or the SSCL paid on our purchases. The balance thing we need to pay by installment. If there is any excess payment, we can carry forward, and it should be considered as an advance payment for next installment. Right? Likewise, there may be excess SSCL paid for previous taxable period, which is brought forward to this period. So that credit can be claimed, and apart from that, SSCL need to be paid by installment. Super fund liability need to be discharged second month on or before 20th of the second month. Second month liability need to be discharged on or before 20th of the third month. Then balance thing for the relevant taxable quarter need to be discharged on or before the 20th day of the month coming after the 11th quarter. So return need to be submitted also on 20th of the following month of the end of that quarter, and the maintenance documents requirement, that type of things. Say small question could be tested, right? Another question. Another two questions. Out of the two questions, one question could be just like advance income tax, withholding tax, applicability of the withholding tax, and that type of things. So in that context, the withholding tax is applicable under three categories. First thing is employment related payment. So it is subject to APIT. So we cannot determine what is the tax rate need to be applied in that context because it's subject to APIT based on the APIT table. So second part is investment return, just like interest, dividend, royalty, rent, natural resource payment, pay annuity, discount, that type of thing. So there are different rates in that context, just like say rent is applicable. In case of the rent, it's 10% if the monthly rent payment is more than 100,000. In case of the dividend, it is 15% if the resident company distributes dividend out of its profit. And rent 10%. What is this? The royalty and other charge, just like that, is 14%. Right, including the payment to non-resident. Right, that rate you should have a good understanding. Remember that in the investment return, assessable income from investment, that tutorial, that rates are especially mentioned. I have mentioned, so you should comfortable with that, right? So whether the payment is close to whom and all those things need to be especially mentioned there. So it also, that type of question, say item 6 or 7 item will be tested, different payment type under that question. And the other withholding tax is liable on the service fee payment in the case of the person who make the service fee payment to resident individual. Remember, resident individual, just like teaching, lecturing, insurance brokers, or other independent professional services, it prescribed just like lawyers, doctors, accountants, software developers, that type of person, right? So in such case, if the payment is more than 100,000, it's subject to 5% withholding tax. So basically, that could be that type of question could be coming this time also. And another question is there. It's generally you can answer the all of the the areas what we have learned, just like say chargeability of Sri Lanka income tax, submission of return, payment method or the how we should pay that thing. So this the yesterday was the uh, assessment based payment for the year of assessment 24-25. That means if the installment payment has been made by the taxpayer and thereafter then balance tax liability that need to be discharged within 6 months from the end of the year of assessment. So 6 month period is ending with 30th September. So balance income tax liability need to be discharged for the year 24-25 by 30th September, yesterday. You know that very recently, most of people, they received only payment slip. Check it the last couple of days. There's a huge count in the Department of Inland Revenue who coming with that paying slip. I got this type of documents. What is this? They ask. Even few people ask from me also. What should I do? Do I need to pay any payment? Oh, whether we need to submit return, that type of thing. So if somebody is receiving a payment to slip means the tax authority or the person has already opened a tax file with the tax department. It has been allocated income tax file was activated. Therefore, he has to submit the return definitely. Somebody received an payment slip by 30th September asking the make a payment by 30th September. That means they pay into 24-25 tax return need to be submitted. So that type of question will be tested, right? So basically that is the 100 marks question paper. So double tax evidence agreement, I am the relevant article I am providing with the question paper. You can use that thing and you can answer that question. So question number 1, 50 marks, 2, 20 marks, 3 what 10 marks. Then the part 1, part 2, 10 marks each 3 question. Out of that you can work out 2 questions, right? I am not changing the structure of the paper this time. The last couple of papers, if you check that type of questions, that could be the structure of the paper. Is there any question on the structure of the paper or areas to clarify? Please ask now. Hello, you have to talk, huh? Who is this? Angelina, right?
Yes, sir.
So Angelina asked that whether I'm going to test VAT on financial services. No, I'm not going to test VAT on financial services this time.
Right, sir. And so about the theory questions, which areas should we mainly focus on?
Theory question means what? What do you mean?
That is for question 6 and part 1 B of the papers.
Part 1B actually is just like advisory question, just like say what kind of just like say if they are going with an expansion. I could show I will show you that the pilot paper, the model paper, the papers what I have decided for this thing. But remember that because it's not the same question paper or the questions which is coming under the examination condition, right? It's just like you to think on how you to focus on how you should do this last moment discussion, right? I will show that so just like say if they are registered with the department or they are uh, they are going to do an investment in Sri Lanka, they should do that one, especially how to get some sort of tax benefit. You know that if somebody is going to make an investment more than
Enhanced
3 million
capital
USD,
losses.
enhanced capital losses are there. if somebody is rendering services outside Sri Lanka, they can enjoy tax exemption, right? Just like say offshore services. So the other thing is sourced entirely outside Sri Lanka. Just like say somebody is having branch office outside Sri Lanka, so that will be exempt. So how we should structure that type of investment? That that type of, I mean, the answer is expected in that for that particular question.
Right, sir. And so for question 6, usually you give like theory questions like,
Basically, it's focused on the administrative thing. Just like say I'm just starting a business. Say what are the taxes in Sri Lanka? Last time I asked, you have to mention that what the tax, how it's applicable, the threshold, and date of return submission of the payment. That type of answer, right? Or say somebody is open a tax file, then what he should do, the compliance requirement.
right,
That type of question.
right, sir.
If somebody failed to pay taxes by due date, so what are the implications? What the additional tax or the risk or the exposure? Just like say penalty, legal action, or administrative barriers, that type of thing. So it's basically practical question from the day-to-day
So actually,
complex.
what
Yeah.
is the difference between implication and exposure?
Implication means it could be some sort of say financial and legal, that type of thing. Exposure is entirely on the financial risk.
Okay, risk. Right, sir.
The implication, I mean, it could be so. Of course, the one part is financial, just like say penalty, uh, and charge or the interest, that type of thing, and maybe some that say some renewal and all those license renewal and all those things. It is required to get tax clearance from the commission agenda. Somebody is not compliant with this, so he cannot do. He cannot get that thing.
Right, sir. Clear.
So yeah.
Also, sir, so when I went through the past papers, I noticed that usually for question 2, you have given like, I think the structure has changed the last paper, I think the 16C papers, question 2 was different to the past papers. So which structure will we
Previous one.
follow?
Yeah. Yeah, very recent paper. I mean, it's a little different from the previous paper, right? If you
Yeah.
check the last couple of paper, one paper giving that financial. I mean, there is no. I mean, the big change to that, Angelina.
Okay.
Yes, is here and there that information has been given in the para. If you focus on the basically, that's what I mentioned that we discuss some in detail what is our group assignment.
Yeah.
So that type of assignment I have given even previous batch.
Okay.
So that's what I request you to be there in the data they where we discuss that group assignment. This
So
I
will you
told
be
no.
giving
So there
us
are,
like a pilot or like a model paper that we can
sorry.
get? Will you be like giving us like a model paper or like a pilot paper so that we can understand like the structure of the paper, especially for
Yes, of
the
course, but remember, remember, take it from me because I'm repetitive telling that thing. This, yeah, I have developed some extent that model paper, the pilot paper, but don't, I mean, go the answers based on that model paper, right? There are changes because I cannot test the same paper in the exam.
yeah,
It's not fair, right?
yeah.
Can you see this my screen? Hello.
Yes, sir, visible.
Right. So just like this type of question, right? So structure of the paper. So the question number 1, right? So in this question, I have given that what is this?
ස්ක්‍රීන් එක පේනවා පේපර් එක පේන්නේ නැහැ. Teams ස්ක්‍රීන් එක තමයි පේන්නේ.
Now is it visible? Hello.
No, sir.
Okay. No, sir.
Can you see?
No, sir.
Okay. Teams ස්ක්‍රීන් එක තමයි පේන්නේ අපිට.
Can you see?
No, sir.
No, sir.
No, sir.
Okay.
Yeah.
Can you see? Why is that? Why is that? Still not? Hello?
No, sir. Still not.
Sir,
Yeah.
sir, once you click the share option, you give the entire screen, then it will be visible, sir.
I have them done. I put that also. It says that the Microsoft is sharing your screen. That's also coming. Can you see that? No?
Not yet, sir.
Still cannot? Hello?
No, sir.
No. Hello.
Not visible, sir.
Angelina, you can't you see my screen?
No, sir, it's not visible.
Why it is that? Hello. Can you hear me now?
Yes, sir.
Yes, sir.
Yeah.
Can you see my screen now? Hello.
Visible, sir.
Right. Can you see that paper? Hello.
Yes, sir. Yes, sir. Yeah.
Right. I share the same thing with our your batch representative as well, right? So this type of question, right? So it start with that. What is that profit before tax? Right. You can see here profit before tax, and they have given that other details. This company is doing what type of activity, and the relevant turnover, and the net profit before tax. In apart from that, in this is as after accounting all recognized expenses and the share of profit of this. There's a profit share investment made in joint venture. This joint venture is set up at Bangladesh with Kamila Bank private limited. So joint venture basically goes as a separate business, just like say it's a partnership with another person. You know that 50% equity holding by each partner. So they have set up that outside Sri Lanka. So therefore they are intended for the profit share. So that particular profit share is for the Sri Lanka tax purpose. It is foreign source income, that is tax exempt 24-25. Right? Business income under the exemption, you can read that one, foreign source. Right? So that is exempt. So remember that type of things are there. So expenditure relevant to earn for exempted profit also disallowed when we are work out the assessable income from business. Remember that part. Right? Say we have exempt income, say foreign service income, making services to rendering services to person outside Sri Lanka, and earning in foreign currency remitted through bank, that is exempt from income tax for the year 24-25. Say somebody is doing that type of activity. So that income is exempt. So therefore that particular expenditure, somebody is incurring expenditure to earn that particular income, that income expenditure cannot be deducted against the assessable income from business, right? Remember that part. So it says this company and having, and also thereafter it says that share capital reserve. So basically this is to work out that this information is very important when we work out the deductible amount of finance cost, computation of the deductible amount of finance cost. So thereafter it says these type of things. Basically, I'm not changing this type of in the income, just like say dividend, interest, or share market investment, disposal of assets. So disposal of asset which is used in the business, we have to work out assessable charges or balancing allowance, right? So then expenditure side, depreciation, amortization, all are provision, gratuity provision, that is also provision. So provisions are disallowed. Then entertainment expenditure disallowed, and also that is under section 10. And also any expenditure which is connected to the liquor, purchase of liquor or tobacco, that is also disallowed. Fees and penalties charged for the violation of law, written law, that is also disallowed. And so in this question, as I have mentioned that you can see that foreign profit share is given that the foreign business or the foreign source they have given, and thereafter it says that there are some expenditure foreign traveling, that is to set up this branch office. So they are branch or not branch office, that is business ventures outside Sri Lanka. So that is also disallowed, right? Is there in the income statement that have already been deducted when you arrive in the profit before tax. So therefore it is disallowed because it is incurred to earn exempt profit, right? So and repair cost, maintenance and improvement. The repair and maintenance connected to the depreciable asset, that is deductible, but improvement cost there is a limitation. It says if we are having a written down at the previous year end, so on that it could be 5% of the 20%. 5% in connection to the building, structure, similar nature thing, permanent nature. And other classes of facility, 20% of the written down value, tax written down at the end of the previous year, remember. If there is no written down value at the previous year, it should be a straight line basis or a period of 12 years in connection to the other building and other thing. Building it is for a, sorry, building and other thing is 12 years, other assets is 3 years. That is the improvement cost, right? How we can deduct. And penalties, again, that is also disallowed. Legal expenditure. So basically that professional services independent character. If you are making any payment which is subject to withholding tax, if the payment or the monthly charge is more than 100,000. If that withholding tax is not deducted, so I mean, it is not telling that the tax has been not deducted, but it could be say in an indirect way, just like total service fee has paid. Deduct expenditure also disallowed. And remember, there's another section if any expenditure which is more than 500,000. Could be single transaction, series of single transaction. So if it is more than 500,000, it should be paid via through account pay check, account pay bank draft, online transfers or the bank transfer, so credit card or debit card. So if not, that expenditure is also disallowed, as well as it shall not be considered as a part of the asset, cost of an asset, right? So remember, if it is the case, so that it is not possible to even claim capital allowances in case of the asset, right? And distribution expenditure, advertising expenditure. So advertising expenditure basically meaning is that advertising expenditure is awareness of your goods or services to your target market. But advertisement may be for the recruitment purpose or sale of asset, that type of things are basically allowable. It is actually not an advertisement expenditure. It's like say in case of the vacancies, if you are putting an advertisement, it is recruitment expenditure, right? So it is allowable. So donation, of course, in the donation, it is not deductible in any circumstances, gift, donation, that type of thing, because it is not relevant to the connected to the closely connected to the generation of income or the production of income. Therefore, it is disallowed. But we can check whether it is coming under the qualifying payment, right? That could be tested. Business promotion expenditure, that is possible. ROU assets, it's not entitled for capital allowances, but if the asset is used for the business, we can claim rental payment as a deductible expenditure. So asset details given that opening balances and the closing balances, remember on the closing balances, we can claim capital allowances, but we need to check whether it is depreciable asset or not, especially land that is not attract capital allowances. Office building, yes. Computer equipment, yes. But in this case, you can see that addition and disposal. So disposal, we have to remove that is from opening balance. And during the addition, we can claim capital allowances. The conditions are we should have the ownership, including asset under the finance lease, and it should be used in the production of income during the year. So in such case, we can claim capital allowances. Office furniture, motor cars. Motor cars, in that context, motor cars are not entitled for capital allowances, which is used for traveling purpose. Vehicle used for traveling purpose, right? Computer software, yes. In case of the computer software, two things. One thing is we need to check what is the useful life. They are giving useful life over that particular period. Otherwise, I mean, there is no useful life given. That could be, the capital allowances could be over a period of 20 years. Another thing is, if a software developer is providing independent personal services, so if the relevant tax is not deducted, that particular expenditure is not deductible. However, when we are capitalizing that part, if that payment is made other than the form of that, what is the allowable method of the payment, so that asset is not qualified for capital allowances, not entitled capital allowances. Details are given in the to work out the capital allowances and ROU assets I told you. So finance cost income in and that context, it could be that interest, charges, that type of thing, which is connected to the financial expenditure. And also just like say exchange gain or loss will be coming, right? And in addition to that, in case of the exchange gain or loss, if the company keeping accounts in LKR, if there's unrealized gain or the loss, we are not considering. Unrealized gain is not taxable. Loss also not a deductible expenditure, but realized gain is liable for tax, right? We have to consider as part of income. And additional information just like gratuity payment we can deduct. Installing income tax, once we work out the tax liability RF, we can deduct. Lease rental payment related to the ROU asset, we can deduct. So this they have given additional information that in relation to the investment in the joint venture, the company has recorded share of profit to the income statement unless especially mentioned no expense related to the joint venture was made by the company. That means especially if in this case, they especially mentioned that foreign traveling costs are related to setting up that venture, foreign rich business. Other than that, no other expenditure relevant for the foreign venture. That's what it means. That attract 40 marks. So let me to share with you, what is this answer script that I have developed. This is the way. This is the income tax computation and the detailed computation of the working one. Assessable income from business, we use the profit before tax. Foreign source income exempt, which is be removed, and there are any other source of income is there, we have to remove that because this profit from disposal of computer that we need to work out assessable charges of balancing allowance that need to be adjusted. Interest income is that it is coming under the investment income. Dividend income also coming under the investment income, but we have to check whether it is subject to final withholding or it is exempt. Right, provisioning add back and the disallowable, all the disallowable expenditure, right? You can see here, what is this? Foreign travel. I have mentioned incurred for the production of exempt income. So therefore it is disallowed, right? And repair cost, maintenance, improvement cost, we need to work out what is the deductible amount separately. Penalties, legal fee that is over 500,000 paid in the cash, therefore disallowed. This question, right? Advertisement and that type of things. So if there are any additional working, just like say improvement cost, we have to go with another working. So that's still clear. Answer will be very clear. And this is how I have worked out improvement cost of the machine. So what the capital answer they can claim thereafter, how much we can deduct. And capital allowances also detailed working. The detailed schedule there. I'm not telling you have to use the same thing, but better to work out in this way. So previous year acquisition and this year acquisition, right? On that we have to work out. So number of years we have to remember. Unfortunately, you cannot take that act to the examination hall. Therefore, you have to keep it in mind. So how we can summarize this in a very easy way to keep it mind. So building intangible asset which is having indefinite useful life or a period of 20 years. All other assets over a period of 5 years, except that machinery which is used locally, milking business. In that case, machinery over a period of 2 years. Right? I have mentioned that it is not central because marks are allocated in this way. Half marks for each adjustment. And especially you have to mention that ROU asset not attract capital allowances. Right? So disposal adjustment, very similar. Right? Remember, this is not the real question paper, but the structure is very similar. Right? So then finance cost, how we should adjust. All those things first I have removed from here. I add back and thereafter I gave the capital allowances. Right? So then second income source as assessable
Excuse
income
me,
from
sir.
investment. Yes.
How
Hello?
did you get that cost of debt instrument?
This one. So under
Uh,
section 18.
Below that maximum amount to be deducted for the year 24-25.
Yes.
How did you get that 4 million? Could you please
Yeah, 4
explain?
million.
Below allowable finance cost, that equation.
Yeah, it's not 4 million, it's 1 million, right?
Below that 1 million, there's a 4 million cost of debt instrument.
That should be given in the question. Loan amount should be given in the question. Yeah, loan capital and how much they have paid, it should be there. Is that 2 million? So it's two, right? Interest expenditure or draft facility. Working capital loan. Right, 200 and 800, 1 million, 2 million, 2 million, 400, 4 million.
Okay.
Right? Here altogether, this is not part of deductible, so it is disallowed balance allowable part or relevant instrument. Okay. Right. Right. So then, it's especially in the interest, if it is this one. Net, so we have to gross up that interest. 1.9 million. It's 2,850,000. It should be right here. The formula is this one, right? So it should be 2,850,000 divided by 95 into 100. It's not this 1,900,000 is wrong, right? It's 2,850,000. It should be. Then entering mistake here. Please make that correction. But the answer is correct. So advance income tax we can claim as tax credit, right? This is the part in the second part of the source of income. So
Excuse me,
yeah.
sir.
Yeah.
Yeah, sir. Treasury bills, is it exempt from?
No,
in
it is liable.
Okay, then where do we put it as exempt, sir, for treasury bills?
Where I didn't put that one, right?
No, you haven't put. I'm asking, is there any instance where
Yeah.
we put treasury bills as exempt?
Treasury bills, no. No. Treasury bonds are liable unless it is sovereign bonds or the Sri Lanka development, which is dealing outside Sri Lanka.
Okay, sir. Clear. Thank you.
that clear? Right. So that question, part 2 of the question, which asks that what is this? This question they are asking, they are coming with, they are coming with expansion, right? How the new investment, how it should be. Right. So definitely so this on your examination content, this type of question will not be there. I mean, they're asking this is enhanced capital answers. Other than that, other areas they can ask, right? So say they are just a started business and how, what is the thing, what the compliance requirement, that type of question, right? The question number 2. So you ask that whether this time also this type of structure of this question number 2 is this or not, right? So focus on this type of question, right? Remember, in this case, it is bank incorporating and resident in China. So definitely it is non-resident person. And in case of the bank, it is the important point is that interest cost charged by the head office we can deduct. But remember, in other businesses, it is not deductible under the China Sri Lanka DTA. You have to read the DTA with relevant country, right? An article. So it is provided for your examination purpose. You can read from there and just apply. Okay. So in this question also the same thing. I will show you that I recommend you to use this structure. I have just mentioned that's how we should be given the marks. Residential estates of that bank. Says company, this is incorporated now for Sri Lanka, doing business outside Sri Lanka. Therefore, it is non-resident person for Sri Lanka tax. That is the basic understanding. It should be the basic understanding. So I'm happy if you are just mentioned that this is incorporated outside Sri Lanka, and as for the inland law, it is non-resident person for Sri Lanka tax. And then what is they are doing? They are basically activities, rendering services, so receiving service fee. So they are, that is business. So they have source in Sri Lanka. So second thing is source in Sri Lanka, right? And the third one is category of the income. Yeah, as I mentioned, is a business income. And next area is whether there is a permanent establishment or not. So that you have to refer to the DTA. Article 5, how it should be. Whether say in this case it is branch office, obviously this is coming under the prima facie permanent establishment, just you have to mention. So it says that as per the Article 5, so this is fixed place of business through with that business of the enterprise is solely or partly carried out. That is the definition for the permanent establishment, right? You give some understanding of that meaning. If you can read, that's fine. Then who has the taxing right? So say in China, Sri Lanka DTA, if that particular non-resident person is rendering services to Sri Lanka, and if not visiting Sri Lanka or not physically present in Sri Lanka more than 103 days, so he doesn't have a permanent establishment, then they are liable tax only in China, not in Sri Lanka. But if there is a permanent establishment, taxing right comes to Sri Lanka as well, to the extent that the profit which is relevant to the permanent establishment, it is subject to tax in Sri Lanka. So give one sentences whether that bank is liable for Sri Lanka tax or not. That's all. Right? So, and thereafter computation, very similar to the previous, the business computation, we are using the profit before tax and adjust the disallowable tax. So, disallowable expenditure. So, you just mentioned whether other expenditure is deductible or not. Then, any disallowable expenditure, especially under the DTA, allowable or not. Remember that what is this other than bank? Then bank expenditure connected to the, what is this, royalty managed, the interest from loan provided by head office, it's not deductible, but this is bank, therefore it is deductible. But other royalty, management fees, special fees, that is not deductible unless it is an actual reimbursement expenditure. So capital allowances very similar. And the discussion they're asking that how whether that head office expenditure they have given that, so how we can deduct. So it is subject to 10% of the assessable income of the branch, right? That's all. So remittance tax liability, here it's asking whether they are liable for remittance tax. Yes, on profit remittance, they are liable. But if you have worked out that thing, how we should work out? We have to work out first taxable income. On that tax liability, we can deduct. After deducting taxable profit after tax, on that 14% tax liability is deducted to be paid as remittance tax. Remember that, right? Is that clear? Hello?
Yes, sir.
Right. You can refer to the structure of this thing. There may be some changes, but the structure of the paper and this is I have suggested answer. I mean, very formal way I have put it that answers. So you to get an understanding about how that marks are allocated. So in this question, half marks for each special thing, just like so application of DTA and capital losses also attract little high. I have given marks. So not the the total marks is not allocated to the the answer. So in between, right? So they are not. So in this question also that there is a donation, but it is not a qualifying payment. Likewise, half marks is allocated. Right? Is that clear?
Yes, sir.
Right. So then value-added tax question is about it should be Sindhu, not the one. Sindhu. Supply Private Limited. Right. So they are what they are doing in Sri Lanka, and they are giving the details of what the sales and of course supply. So product manufactured by the company and imported and local sales. Both are standard supply. Therefore, in the answer script, so it goes in this way. I work out standard supply separately, local sales, imported sales, and thereafter it says additional details. The question, what is this sold land? So in case of the land and improvement, only improvement is subject to VAT. Therefore, the value of the supply value of the land and improvement part we need to work out separately. Meaning that how to work out on that part. This total sales proceed minus market value of the bare land at the time of supply, right? So sales proceed minus market value of the land. It is because in case of the only land, there is no value of supply not coming here. But machinery says total amount received. Remember that one, right? During the taxable period, the company realized proceed of rupees so much. That is the amount realized. That should be considered as the inclusive tax. That inclusive amount. Therefore, I use fraction and work out the value of supply. You can see that 2 marks has been allocated. Land, one mark has been allocated. So I just mentioned that zero rate supply and excess supply, but not necessary in your case because there is no zero rate supply and excess supply. If there are, yes, otherwise not. I give an hint that I'm not going to test that excess supply, therefore this part also not. So then there are input tax. It says, and the input tax, it says these things, only tax, input tax they are giving, right? So on imported material, machinery. So both are imported articles. So it's under importation, it's coming. Very similar question we did in the lecture also, right? Our discussion. So that the import on imports. So then local purchase goods, if there are any yes. Services, there are any yes. In discussion, I think only one. So it could be say imported for the local purchase, that type of thing, right? So that's the total input incurred for the period. That's coming here in this way. Input tax on imports. So if there are any local purchases, local purchase services, right? Altogether we have so much. And if there are any disallowable input tax, we have to remove here from here, right? Then allowable input tax. First thing we have to set off with the zero rate and asset supply. If there are any yes, based on the value of supply. Basically, we are using if it is common input tax. Then balance thing is relevant because in this case, no zero rate supply, total amount is relevant to the standard supply. Therefore, any unabsorbed brought forward input tax, we have to add 4.6 million altogether. That can be utilized to set off again the output tax. So it's limited to 100% of the output tax. If there is more than that, say 11.6 million here, so only we can claim 9 million. So here below than that output tax, so therefore entire thing we are claiming. So balance things to be or the tax payable for the period. Tax payment we can deduct as tax credit. Tax credit has been separately given. So payment of so much has been done as monthly installment pay. Right? Clear? Any question? Hello?
No questions.
Are you there? Right,
Yes, sir.
sleepy. Right, next question is SSEL, right? So I mentioned that how the liability of the SSEL in this question is a manufacturing company and also they are distributing some product. So it's only two items they are giving that manufacturing, in that case, 85% of the sales is the relevant turnover for SSEL. And distributor, we have to check what is that distributor. It says domestic and overseas market manufactured by the company have been selling in the domestic market. Exclusive distributor of the appointed renowned manufacturer in China. So it's a foreign manufacturer's distributor. So it is not, he shall not be considered as a distributor for Sri Lanka tax. This is here. Right? Therefore, 50% of the each that distributor part is subject to SSCL. So it says 100 million coming from manufacturing and 85% with the SSCL liability 2.5%. And other thing is distributor part. But it's also and retail 50% I consider that that's the thing. So total SSCL. And it says that in the question that they have incurred some SSCL cost on their purchase. It is not a deductible expenditure. You can deduct here. Not a deductible credit, really. Not expenditure, deductible credit. And then balance SSCL for the year is then brought forward from previous period. I think it's there. Yeah, 350. So you can consider as a tax credit. And the installment payment for the period, relevant period. After deducting that thing, balance SSCL liability for the period. Right? Apart from that, it can be a question like when that SSCL return need to be submitted. Right? And what the payment due date, that type of questions. Should be there. Remember the thing, right? Return submission date, payment due dates. So this type of question can be tested. So APIT and AIT, so I use little different. So if they're asking that there's a company, they have manufacturing company and they have started business in 1st January. So they have made some sort of expenditure. So they're asking whether how that any potential tax exposure. So it says company has recruited an operational manager to oversee the business operation. Company monthly remuneration so much and additional traveling allowances they are paying. So it is employment related payment subject to API. So I put it in this way. So item. So what is this payment for employee? Just like say salary, and so it is coming under the nature of payment employment benefit. Recipient resident individual, so subject to API, right? Just mention that. So then company has entered with owners of lease free shops with a monthly rent of rupees 110,000. So rent is more than monthly rent is more than 100,000. Definitely it's subject to advance income tax at 10%, right? Office rent more than 100,000 per month. Paid to resident person 10%. If it is paid to non-resident, it's 40%. Unless DTA is available, right? Then software developers charges, of course, in case of the individual person who is providing that software engineer, it says the individual, give an hint of that individual is providing that software development charges for the service. For that thing, we are making the charges, payment for software developer, service payment to independent service provider, that is prescribed independent persons, resident individual 5%. Remember, monthly amount is more than 100,000. Yes, right. So that should be the, this is actually my format I have used. It's covered everything. Right, apart from that, say date of the submission of return and the payment date. So remember that return does need to be paid by the on or before the 15th of the next month. Right. And what are the things that should be in the withholding tax certificate details? You just check it. Say if you are person who is having interest income, you would have seen that what is the thing coming under the withholding tax certificate. So details that need to be declared in the withholding tax return, that type of thing. That's all. And the question number 5. Any question? Hello. Hello. Are you there?
No, sir. No questions.
Okay. Fine. So then the question number balance part I have not. That is, I gave you to write that one. Discussion is asking prepare a report to be presented in the investment forum covering the following area. Charge of it for Sri Lanka income tax under 11 Act. So charge of section we discussed person who is having taxable income or person who received final withholding payment for the period where what is that period? Year of assessment. So use some sort of the interpretation. Keep in mind and that to be applied. So deductibility of section under the Inland Revenue Act, a person who made such expenditure, his business related expenditure. What type of expenditure? Disallowable and allowable. Just have few things because they are asking to cover 5 areas. So each area may be attract maximum 2 marks. Just mention that yes, this type of expenditure is not deductible and this type of expenditure. So section 10, 11, 12 to 18. Just make a summary. Distinction between VAT liable supply, zero rate supply, and exempt supply. Income tax liability exemption available to gain from the realization of investment assets. Charge duty for social security contribution levy. Right? So, are you clear? Hello?
Yes, sir.
Any question to in the answer or areas to clarify? Friends,
Excuse me, sir. Question 6, does it contain from the all the areas?
in this question, yes. I
So
mean,
usually
it may
from every
not
part-
be the same. Sorry, may not be the same question, right?
Mhm.
කටපාඩම් කරගෙන ගිහලාම ලියන්න නෙමෙයි උත්තර. It happened in the previous, so I don't like to. That's what I don't like to give comprehensive answer. Some students they are keeping in mind all those things and they are put into the reproduce the same answer, but it's not the question is little change.
Okay.
Just have some sort of understanding. It's general open question. Question number, the last question is open question, but out of these 3 questions, you have to answer only 2, right? Remember, ඔක්කොම ලියන්න යන්න එපා. Instruction කියවන්න ඒවා කියවන්න නැද්ද? නෑ සමහරයි. Compulsory. This section is mandatory for all students. All questions they are known. So say out of this section contains 3 questions. You are required to answer any 2 out of the 3. Right? හරිද? Nimesha? Nimesha sleepy.
No, sir.
Tag number 3. Kumar Peli? You okay? Hello? Amin? Yasiru? So Vijayavardhan is there.
So I have a
Dayanand?
question.
Yeah,
On
ask.
lease
Yeah.
interest, is it deductible?
Lease interest on what type of asset? If it is finance lease, yes. We have, it is called, I mean, we have to check what is that asset, whether it is used for the production of income. Yes, that is coming under the finance cost. Right? So then it's subject to thin capitalization or the maximum limitation we had to work out. But in case of the ROU asset, it is not. Lease interest is not deductible. Only lease rental. It's just like rent. Right? After all?
Okay, ROU rental, is it deductible?
Yeah, if it is that asset is used for the business purpose, yes. ROU asset rental we can do.
Okay, sir.
In this given question that they have used for the vehicle park, right? That is to facilitate their customers. Yes, possible. Ahmad?
Yes, sir, fine.
Adu. Nasir? Devandi? Asela? So, you see that, check that the answer script as well. Unfortunately, that, the previous answer script or the paper's answer script, I don't have any authority to share those things. That's what actually I developed this, suggested answer. Very similar to the answer script. The way I am giving marks, allocating marks is very similar, right? So therefore, focus on that. My recommendation is to do that small question first, just like say SSCL and even VAT and other questions, and thereafter keep that the time for the question number 1 and 2. Question number 2 also structure the answer for the first part. So where I have developed this answer, right? Whether he is a resident or non-resident, and whether he has a source in Sri Lanka. If there is a source in Sri Lanka, what is the category? So business. So then in Article 7 is applied. So therefore, whether there is a permanent establishment, right? Then work out the question will ask that to work out that income tax liability. And also the computation of the remittance tax liability. That is important. And some payment to non-residents are not subject to advance income tax, right? Just like say interest payment to non-resident person on loan provided to Sri Lanka, resident person, any person. So that is not subject to. මේක අය දන්නවනේ ඒක නේද? Clear? Niyuru? Dhananjay? So friends, any area? ඔයගොල්ලෝ කතා කරන්නේ නැහැ නේද? Angelina? Doubts are clear?
Sir,
Yes, sir.
Yes. Somebody
sir,
also asked question.
so
Yeah.
under the SSCL, in
Yeah.
the wholesale and retail sale, can you describe the two parts again?
Wholesale retail actually, I could say it's 3 parts. One thing is local buying and selling. So it's local buying and selling means we have the ownership of the inventory. We purchase and we sell, right? Other part is import and local sales. That is also considered as wholesales and retails. On both part, we are considering 50% for the SSCL as relevant or not. The third category what I discussed is the distributor. The correct word is registered distributor. Registered distributor means a local producer or the manufacturer, appointed person to distribute his goods in the local wholesale market, right? At the price given by the manufacturer. So basically in that context, for the accounting treatment also I explained in the lectures. So ownership of the inventory is not coming to us. We just making the distribution. But for the SSCL, we have to consider 25% of the total sales, and that 25% subject to SSCL at 2.5%. Is that clear?
Yes, sir. Clear. Thank you.
So when this exam is scheduled, is Saturday or Sunday?
Saturday, sir.
All right, okay. Are there anything to discuss?